Hello, you're watching Dukascopy TV, and as it's Monday, Jean-Francois Owczarczak of MJT is back in the studio with me today. Jean-Francois, welcome back.
Hi, Thomas.
Let's start with euro dollar. Draghi's game for more QE, and the US recovery is still on track. Talk us through what you've got.
Okay, well, we're back on the Dukascopy mosaic with the euro dollar here up in the corner. Cable, Australian dollar, gold, dollar Swiss, dollar yen, S&P futures, and 30 years Treasury bond futures. And so the euro, as we see, this is daily chart, is pretty much towards exhaustion, so we're going to focus on it. And we're going to look at an investor's view. So an investor's view is a combination of a weekly chart, a daily chart, and an hourly chart. And the weekly has been in an uptrend for quite some time. The targets are quite aggressive. We may think that we're probably more into coming out of a base, but nevertheless, it's still an uptrend at the moment. And at the daily, and that's where I really want to focus a bit of time today, is still an uptrend, but as you see, we've had quite a large exaggeration during the month of March. We've had our risk index getting into the red overbought zone and actually turning back down below it, which is often a sign of a upcoming reversal. Right. And we've also had stress, meaning both our envelopes touch each other. So it means the short-term trend went a bit too quickly in respect to the long-term trend and hit against the longer-term envelope. So both these signs of exaggerations are quite relevant at the moment. And so what we could say if we add our targets here, which are coming into their target zone, is that pretty much to the upside, the euro, the US dollar is exhausted. Now, in an exhaustion phase, you could either expect a correction, a consolidation, or an outright reversal. As we said, the weekly is still an uptrend, so the probabilities are that it may not be a true reversal, but we would at least expect a few weeks, usually 1 to 2 months of consolidation correction. So this consolidation has started mid-March, and it's moving down at the moment, and we're going to focus on the hourly to get a more short-term view of it. So the hourly is in a downtrend, and if we look at it here, it still has maybe a week or so to go. It has already reached some levels of exaggeration. It's in the oversold zone, and so we cannot outrule a consolidation up during this week. But in essence, we believe there's still, and that's, so we have a perspective over the next 2 weeks here. We probably have another figure to go at least to the downside.
Okay. Could we move on to the S&P 500 now, Jean-Francois? Sure. It seems to be continuing to rise. Can you tell us more?
Sure. So we're back here on an investor's view with a weekly, a daily, and an hourly chart. And the weekly is still in an uptrend, and I'm just going to focus on it. It's in a impulsive to uptrend. So that's the last of our targets to the upside. Once these targets are fulfilled, there's not much more hope to have on the asset. And this is a weekly chart, so it's a long-term chart, and basically what we're saying here is that slowly we're getting to levels which are getting very, very expensive. Mm-hmm. So we've been bullish since the last year and a half. We are leading to tops which we believe should be in the next a couple of months. It's hard to say today if they're going to be outright reversals or they're going to have us enter into a consolidation period. But what is quite clear is that it's getting very expensive and that we're in a distribution zone. So we could also see that envelopes are also touching each other and that the oscillator is in the overbought zone. So an expensive environment, although there may be a bit more stem into it. Now, are we going to reach the 1900? That's quite an emblematic number.
You think we are, though?
I think there might be a last try at it, and we might just make it. Now, there are certain elements over the short term which may lead us to believe that it's worth debating. Mm-hmm. And so, the first of ours with the euro, the daily is quite exhausted. You've had already 2 envelope stress, meaning our envelopes have touched each other twice. Our oscillator is back in the overbought zone, and so at least over the short term, we would expect a bit of consolidation here. And this bit of consolidation will probably come in sync with this oscillator turning down a bit. Now, there may be one last move, and that's what my timing seems to be telling me. But again, very expensive environment. So it's really there for the traders to try to get a bit more out of it.
Okay, let's leave the S&P for the moment.
Just wanted to have one last. So
sure.
We could see the hourly is still in the bull, but we've had quite a remarkable figure here with on Fridays. Seeing the S&P open and hit new highs and then quite aggressively. It was pretty much a one-day reversal, and that's often, if not a sign of important reversal, at least leading up to levels where at some point you should see some longer-term reversal of the trend.
Okay, Jean-Francois, sorry, we'll have to move on just because of time. Let's look at the dollar yen because, and I just want you to answer this question very quickly before we look at more detail on the dollar yen. I was interviewing someone earlier, and he quoted to me that a bull market focusing on a minority of the equity market universe, export-oriented CIEs, is not sustainable in the long run. Now, do you agree with that? What's your take?
Well, I mean, I'd say two things. One is the quantitative easing that they're putting in Japan sustainable over the next few years, because it is quite aggressive. So it really needs to work quite quickly to not end up pear-shaped in a way. And then the other thing is that the rest of the equity markets have been in quite a bullish momentum over the last 2-3 years. And so in a way, Japan is following that trend. And so I don't believe we could just see it in isolation. It's true that it's focused on a specific area of the Japanese market, but in essence, there are other elements at play here.
Okay, let's focus back in then on the dollar yen. What have you got here?
Well, basically, Abenomics started in 2012, and we could see the strong impact that it actually had. Mm-hmm. We believe it's not quite over yet. There's probably a bit more to go. Also here, we're getting towards exaggerations level that are quite important, but we would have the potential to probably make it up to 110 or until the end of the year. So there's a bit more into it, we think, over the longer term. Over the daily, well, we're also getting towards a level which, as with the other two, is quite exhausted. So I wouldn't expect, if there is a move to 110, for it to happen now. Mm-hmm. But there's a bit more steam into it over the next few weeks. So in that respect, I wouldn't be calling a reversal at this stage. And over the hourly, we've had a temporary setback at the end of last week, but it still seems to be in an uptrend too.
Thank you, Jean-Francois. Thank you for coming in today. That's all from Dukascopy TV for the moment. Of course, Jean-Francois will be back with us at the same time next Monday as well for further markets analysis. But from me and from Jean-Francois, goodbye.